everybody, it's Shannon from AlphaTrends.net. Today's Saturday the 30th, and I wanted to go over some short interest information and use the example of CarParts, PRTS. So before we get to the sexy part of why this might be a short squeeze candidate, and I don't have a position in it right now, I want to go through understanding short interest. Short interest is sometimes confusing for people, and here's what we know about short interest. FINRA, the financial regulatory body, of course, requires brokerage firms to report the number of shares that their customers have outstanding twice per month. And they take that data and then crunch it, do whatever they do behind the scenes with it, and they then release it to us later. So for instance, the latest data that we have available to the public was was as of Friday, January 15th. So the total number of shares short for that day we know right now. We were told that on January 27th. Each firm has 5 days to report that information, but it's not disseminated to the public. This is very important until, in this case, 7 business days later. So it's not really the most accurate number that we have, but what we can do is we can look at, so for instance on NASDAQ.com, the short interest, we can see on CarParts that as of January 15th, and we didn't know this until just a couple days ago, there were 13.9 million shares that had been shorted and not yet covered. Now, a couple things terminology-wise. The average daily volume during that time was 2.2 million shares. That means that if the shorts were to cover their position all at once, it would take them about 6.8 days of average daily volume to cover. Now, of course, if they were to do that and panic, it would, they would bring in a lot more volume as well. So that's just a theoretical number. Days to cover is also known as short interest ratio. What we really, this number by itself doesn't help us a whole bunch. I mean, it's good to know 6.7. I think anything over 5 is pretty significant in terms of, how will it impact liquidity, basically, is what we're saying. But what's more important is looking at the trend of the short position. If we go back to April of last year, there were only 35,000 shares that had been shorted. Now, back then, the average daily volume was only 288,000 shares. Well, really the shorts started getting aggressive pretty much in August. They had 2 million shares, but then as of September 15th, in that 2-week period, they added 4 million shares, and they've been adding steadily up till the end of last year. It was between January 1st and January 15th where they covered about 1 million shares. So where we can really start to realize the value of this information is to look at it on a chart. Now, this is Koifin. They have a free, you can sign up for free and get this information. Here's a regular price chart, of course, and below it what we have is the number of shares that have been sold short. Again, it's 14.92 million shares. It looks like their data hasn't updated. Actually, they're still showing the December 31st volume. So anyways, we understand that in the last 2 weeks they've covered 1 million shares. Let's not get all hung up on what that data is right now. The true number is 13.9. So 13.9 is still quite significant. Basically, it's this amount right here. And if we look at it and say, what about the float? Well, the float is the number of shares available for trading publicly. It's what's floating out there in the public. So as a percentage of the float, 30% of the float is short, meaning a third of all shares outstanding have a bearish bet against them. So when we look at this, again, we recognize this is where the shorts really got aggressive. They went from 2 million shares to 4 million shares. So they added it in this time right here, down at about 12 bucks a share. Well, let's go over to another chart, and this time we'll look at on TrendSpider here. What we'll do is a couple of things. We'll look at those numbers and say, again, from June 15th is where the short position was just 370,000 shares. So we can go to June 15th right here, and we'll right click on that and create an alpha trends anchored VWAP, meaning the volume weighted average price from that point. So the volume weighted average price from that day, the average price that the stock transacted business, long or short, between June 15th, when the short position was 371,000 shares, and January 15th, when there were January 15th right here, the average price in there, you can see, is at about $12.63 per share. So when the stock broke higher on Tuesday of last week, imagine you're one of those short sellers. How would you feel? Would you feel like you've got a good thing going, or would you start to say, hey, this could be the next GameStop. I've got to start covering my bearish bets. So in order to do that, they buy stock back. They create another source of demand. Well, of course, now we've got all these Reddit traders trying to target these stocks. So they're competing for demand. That is, the short sellers are competing for supply that the people who are trying to squeeze the stock are trying to buy as well. Well, look at this stock now, and just some basic things. If you look at technical analysis 101, you know that resistance broken tends to act as support. So this prior resistance in this 15 to 16 level, and it's, a lot of times it's a band of support and resistance, but basically this level in here, this prior resistance, now has the potential to become support. So how do we look at the psychology of that? Well, imagine if you're the short sellers in there and you see the stock broke out, it pulls back down towards this level, you're going to start most likely sticking some bids in because you're scared. You're thinking, hey, I have to cover this position. I'm going to start bidding for this stock as it pulls back, because this prior resistance is often a level of support, so I'm going to stick some bids in there. Well, what about sideline cash? Sideline cash starts to look at this stock and say, hey, resistance broken tends to act as support. I'm going to stick some bids in there. And what we start to see is this becomes a transitional area where this current pullback from the high of 20 starts to potentially become support. So we can look at it on a shorter term time frame and start to look for some timing cues. So the volume weighted average price from that gap right now so far has been sold into. The average price since that gap is at about 1776. I'm thinking that, if this stock continues to find that there are buyers in this general area and it holds as support, well then if we get back above the average price from that high, it's mostly likely to continue much higher, and the shorts will get squeezed. They get squeezed because the fear is that, when you buy a stock at $15 a share, the most you can lose is $15 per share. That's it. You can lose 100% of your money. If you take 100% of your money and you short, let's say you have $15,700 in your account, you short 1,000 shares of this stock, well, what's the most you can lose? Well, if it goes to 20, you're going to lose basically, $4,000. If it goes to 50, well, theoretically, your upside potential is unlimited. So that's where you get this panic buying. It's a short squeeze because they're feeling the pressure, they're getting squeezed. And this is just an example. It's not a recommendation. I don't have a position in it. It's something I'm looking for. This certainly represents a potential source of demand for this stock that could squeeze the shorts. But again, it's more educational than anything. A lot of people don't understand the days to cover and that sort of thing. So hopefully this has been helpful for you.